What's up, Banter fam? It's your host, Miles here. In today's show, I'm going to be going through an L1 that I think has potential to be a top 5 to top 10 L1 in the future. I'm also going to be going through the market at the moment and looking at what is happening with the Bitcoin price because we are seeing a massive rally across the market today. Is it a fake out? Is it potentially the start of a next leg up? We're going to get straight into it. And the Bitcoin chart right now has broken trend. So I drew this major trend line in on the 4-hourly, and we can see that since the break of trend, we have had a push up of 6%. So it's good to see some volume coming in for Bitcoin after a large downtrend. Obviously, we had that wick down to the 26K region, but since then, the price did stabilize. A lot of people were expecting a break to the downside, but we actually ended up getting a break to the upside. So now we're approaching the critical resistance at the 32K mark. And if we do push up, there's potential to push up to the 36K region. I've drawn my line here around 34K. That's where we've seen previous resistance, but we all know that resistance works in ranges. So 34 to 36 would be that next level if we can push through, or potentially if we are met with resistance here at 32, we could come back down to test trend again. But it's good to see that Bitcoin is getting a little bit of volume in the market. And obviously that has responded amongst the altcoins as well, which has seen major gains over the last day. So we see Ethereum up 10% after being one of the protocols that got hit the most in the market. We're seeing Cardano up 18%, Solana 5%. We're seeing a lot of altcoins here actually rallying quite nicely. Even AVAX, which has had a negative week, is now starting to rally. So we're seeing some of the altcoins getting some strength. But there's one chart which I'm really liking because this was the number one chart that was concerning me. But now we're getting a little bit of positive signs from this chart, and it is the Bitcoin versus the NASDAQ chart. So as you guys know, we did get a decoupling of sorts, which meant the Bitcoin price wasn't responding too well against the NASDAQ. So the NASDAQ was rallying, and we saw the Bitcoin price was basically stagnant, and we were seeing a decoupling, a negative decoupling of senses. But now we are seeing Bitcoin actually gaining a little bit of steam versus equities. We often know that as investors go risk off, they like to pour their assets into things like equities first. So if you're an investor sitting on the sidelines and you have a large amount of capital waiting to enter this market, it makes sense that when you decide to re-enter, that you decide to go for a safer approach first. So a lot of investors that were sitting on the sidelines with cash were opting for the tech stocks over Bitcoin, but now we're seeing a little bit of confidence come back into the market, consumer sentiment increases a bit, that is when we see the Bitcoin price starting to catch up. And this discrepancy, this lag is slightly eradicated. So this chart is good signs. It's good to see that Bitcoin's ticking up, although it's very early days. At the same time, this pump is only a few hours old. It's just on a Monday. So we do need a little more confirmation before we can make any crazy moves. So I'm not necessarily trading this right now. I'm just kind of sitting back. And if you guys were in trades, you'd be well in the profit. And speaking of trades, Sheldon did launch this new trading show on Banter. And I'm really proud of this show. I think it is amazing. He basically sits and he trades for 5 hours live with you guys and gives you setups live on the show. So basically his entries over the weekend, he got the Solana trade at 42, he got Theta, and they all ended up being in profit. So if you guys did get on those trades, you'd be in profit right now over the weekend. So it's great to see a show like this on the channel. So how can you guys get involved? Well, the first thing is Sheldon has a $100 to $1 million roadmap at the moment. So he's trying to trade from $100 to $1 million. It's ambitious, but I give props to him. If he can stick to this plan, then potentially this could be a game-changing show on crypto YouTube. And I'm very excited to see how it plays out. And he's going to be live trading for hours at a time to help you guys trade in this market. So if you are interested in doing a little bit of trading, because I'm actually doing a little bit of trading right now, whilst my portfolio is sitting on the side, ticking over with some DeFi, I'm doing some DCAs. I am also using a few percent of my portfolio for trades. You can do so by signing up for a ByBit account with the link in the description. And yeah, if you guys want to get involved with what Sheldon's doing, I highly recommend signing up, using the link in the description, getting yourselves a ByBit account so you can actually trade alongside Sheldon. And I might start doing some trades live on the show because I want the show to basically be a reflection of my crypto journey and what I'm doing. And I'd be lying if I told you I wasn't trading, because at the moment I am doing a fair bit. So definitely sign up for a link in the description to use ByBit. Or if you want, you've got the other option of Mexi, both great exchanges, and both have a link in the description. And just in case you guys want to know, I said on the show last week that I would be doubling portfolios. Ram was in Monaco with the ByBit guys, and they said that tomorrow we're going to start that challenge. So hopefully on the show tomorrow, we're going to be doubling portfolios. So if you fund your ByBit account, we are going to be doubling portfolios live on tomorrow's show or the next day's show whenever I get that Excel spreadsheet. So that is something to look forward to, potentially win some free money if you sign up for a ByBit account. All right, let's get into the L1 that I want to talk about today, because there's been some big developments in terms of this L1 ecosystem. And I want to talk a little bit about the fundamentals behind it and a staking strategy that I'm utilizing at the moment. And it's no secret at this point, but the L1 I want to talk about today is Near Protocol. Now, it's definitely a very hyped layer one right now, but we did see a lot of the hype kind of eradicated after what happened to UST. So if you guys aren't aware, obviously the UST depeg happened, which resulted in Luna essentially going to zero. And at the same time, Near Protocol was announcing their own algorithmic stablecoin, USD. Now, this was touted to be around the 20% APR range. However, we did see it launched with an APR of around 10 to 12%. So a lot of people thought for an algo stable, it simply wasn't worth the extra risk. So now we're seeing, and we did see a major price depreciation from Near alongside the Bitcoin price being a little bit shaky. So last time I covered this topic before USD, this was just before the UST collapse. Since then, Near Protocol has taken a bit of a dive. So we're getting better entries and better looks at investing in this ecosystem. Now, at the time, I wasn't really preaching aping in because the market was a little shaky, but we are getting some good entries now for some DCAs. And I want to talk you through my DCA strategy when it comes to protocols like Near, and also talk you through some of the fundamentals, which I think are setting Near up to be one of the strongest L1 ecosystems. And I truly believe that. I truly believe that it has the backing and the potential to be a top ecosystem. And it's good that we're seeing some of the hype removed, because when this USD thing was announced, Near was pumping, and it was very hard to see clearly what its fair valuation was because there was a lot of hype, a lot of speculation. Now we're seeing some of that hype removed. We're getting a much better idea of how it performs amongst volatile market conditions. And I must say I've been impressed, and that's really what made me want to do this video today, because I have been impressed with the relative price strength that Near has shown. All right, let's get into the fundamentals. Let's get into why I think Near could be a good play. Let's get into the potential upside, and then also go through a staking strategy for Near Protocol. It's going to be a massive show. So the DeFi Edge did a really good thread on this about a month ago, and some of the fundamentals that he pointed out in this thread are still the same today. And I think it's worth covering again because it does a very good job of summarizing what makes Near special. So the one thing you have to know is that Near's focus is on sharding. So sharding is a scaling solution for a blockchain to become more scalable in order to offer faster transaction speeds, even though it may have more users. Now, the thing is, Ethereum wants to implement sharding as a potential scalability solution, but this is many, many years down the track, potentially 2 or 3 years until we see the full effects of sharding come into the Ethereum blockchain. Now, Near Protocol, it actually has sharding today. They've already solved this issue, and that's why I think the Near tech lends itself quite well for DeFi, lends itself quite well to be utilized as a smart contract L1, because it has this scalability that not many other chains have managed to reach. And I've done a lot of digging over the past few months. While the market's been going down, I've spent this time to really dig into the L1s and see which tech is superior, which tech has flaws. And I must say my conclusion after a few months of research was that Near Protocol's technology is probably one of the strongest out of all the L1s. And I truly believe it probably has a top 3 tech in crypto. You can make an argument for Solana being better due to its speeds. However, obviously that's had a lot of downtime and a lot of issues in regards to the network going down and getting attacked, etc. So when I look at Near Protocol, the fact that it can be faster and cheaper through this sharding and dynamic sharding, which is what Ethereum wants to implement in 2023, lends itself very, very well for DeFi. And this means we could potentially see Near with 100,000 plus transactions per second, which would technically be enough to surpass Visa for real world usage, which is a very good sign. But there's a few reasons, why blockchains succeed. And it's not just technology that make blockchains succeed. A lot of chains have amazing tech, but they don't necessarily end up reaping the rewards of other chains that end up succeeding. For example, Phantom has great tech and a great community, but it still hasn't performed as well as something like a Solana. And the main reason behind that, and the reason why I think Near can succeed, is because of its backing. Now, it has major backers. Firstly, it has a stack development team. It is a former engineer from Google. It also has Alex, who's the director of engineering, who's very talented. And they have massive war chests. So this is what sets Near apart. And I have to be very clear here. The reason why Near has a strong likelihood of succeeding is because it has massive A-list venture capital underpinning Near Protocol's development. It has over $533 million from venture capital. It has an $800 million development ecosystem fund. And as the DeFi Edge points out here, the backing leads to more development, which leads to better dApps, which leads to increased network usage. And then increased network usage leads to increased value accrual. So the more a network can increase its usage, the more users, the more Nears being burnt, the more Nears being locked up, the better it is for the token price itself. But it all starts with VCs and it all starts with funds. And this is why I get a little bit confused in crypto when people are hating on VCs. I see a lot of VC hate on Twitter, and I don't think that's justified, because if we look at a major constituent of success when it comes to L1s, it is VC backing. It is who has the most money to actually incentivize development and to market and to achieve scalability. And Near Protocol has that in spades. So it's one of the reasons why Near stands out to me. So there's another few big things that I want to talk about in terms of Near, and it lends itself to this VC conversation again. But when I was looking through the Near ecosystem, I was blown away by the amount of backers. I was literally blown away. So this is a sheet that looks at the major applications built on Near, and it shows its backers. We can see that Near has Hash, Dragonfly, FTX, Alameda Research, Tiger Global backing it. Bastion, which is a dApp on Aurora, has FTX Ventures, 3 Arrows Capital, Jump, Jane Street, Metapool, which is a liquid staking protocol on Near, has a lot of these big backers as well, and the list goes on and on and on. So it's clear that Near has the backers. It's clear that Near has the backers. And the DeFi Edge also kind of summarizes that he thinks that the massive grant incentives through the developer fund will put Near in good stead to be able to capture a large audience in terms of growing its user base, because an $800 million development fund isn't something to scoff at. That is a major bonus, and it's not on all the Western exchanges yet. So not on Coinbase, not on Crypto.com. And let me just check if this is still the case a couple months later. No, it's not. So it's not on Coinbase. It is on Crypto.com now, but I mean, it's only a matter of time before something like this gets a Coinbase listing. But I wanted to get multiple perspectives in. I didn't just want to look at the DeFi Edges thread in this video, even though he does amazing research and I love him as a creator. I wanted to get some other perspectives. So I've done some digging from other creators, gotten their thoughts, and I'm also going to give you my thoughts with some of my own charts and my own analysis as well, in order to substantiate whether Near is a buy, and then also obviously we'll get into what the approach is in terms of accumulating Near, even though we are in a bear market right now. So Lady of Crypto says, do they have money? Yes. The team, fully doxed, great team, has great developers. Are they growing? Yes. Many opportunities coming out from Near, and we can see that there's 100 job postings right now looking for new developers. So it shows that they're not afraid to deploy capital on development. Obviously, as I showed you before, it's got these big backers. Basically, every single major VC is invested in Near, and we don't even need to point out why this is good, because I mean, A16, Alameda, FTX, Pantera, the list just goes on. And when we look at some other chains, they don't have nearly the amount of backers as well. The tokenomics are an interesting discussion as well. When the mainnet first launched, there was 1 billion tokens listed. Out of the total circulation, there is around 640 million that are currently released. So if we look at the actual tokenomics graph here, only 75 million are left to VCs and early investors, which is 7.5% of the supply. And the rest are being used to divvy out to stakers that actually stake Near tokens to validate the network, which is good because it means that there's less tokens that could potentially be dumped upon us by VCs and early investors. Something that we see time and time again is VCs dumping tokens on retail. Not saying that it can't happen with Near Protocol, just that it's less likely to happen given the lower percentage actually yet to be released onto the market. And this is kind of Sharding summed up in terms of scalability. This is a graph to roughly show you how many transactions per second Near could potentially do cross blockchain, and it has very good tech. So there was also another interesting take on this, and this take was basically to talk about the risk reward of owning Near, because look, we know it's great tech, we know it has backers, but let's look into the risk reward, because when we invest in crypto, it's all about risk reward. It's all about how much risk we are assuming for the potential multiples that we can do on an investment. And you want to be aiming for tokens that have upside potential, but then you're not risking it too much on the downside. So Crypto Boomer has an interesting perspective on this, which I think is worth sharing. And he says that portfolios with Near are the best option for most people because he thinks it has a good risk reward profile. Why? Because you're going to lose most of your money by playing the game. And that's because that's how crypto works. The minority makes it at the expense of many. And it's probably something we've realized over the last few months is that, there is a minority in crypto which are taking advantage of the majority. And how can you join the majority? Well, it's to join the projects that are actually being backed by the minority, sorry. And it's also to join the projects and invest in the projects with a DCA strategy or an outlook, which means you're not getting wrecked. So basically, you are positioning yourselves to hold and accumulate and not getting wrecked by panic selling or panic buying. And this is kind of what Crypto Boomer preaches in this thread here. So he does a few calculations and he says, for the people that put in 5 to 10K USD and cash out 5 million, they took 4.9 million from other players. If 10 people put in $1 in a pot and 2 people take out $4, the other 8 have to fight over the scraps and most of them come out down. That's crypto. Buying and holding an adoption-focused portfolio like the one mentioned is your easy ticket. Within 2 years, it could probably do a 40 to 50x. So he's saying here that by holding a portfolio focused on adoption, it's a good risk-reward play because it can do a 40x over the next few years. And it's a much easier strategy than trying to risk it for the biscuit on some of these crazy alt plays and trying to time the tops and trying to time the bottoms. And the portfolio that he's actually referencing here is Near and Moonbeam. And I would agree with him to an extent because I think both of these protocols are focused mainly on adoption. And when we look at L1 adoption, it's basically all about network effect. Which protocols can accrue the most users? Because as we know, as the more users a protocol can accrue, the more value that said chain can actually accrue. So he weights his portfolio or his recommended portfolio to 65% Near and 35% Moonbeam because by the end of this year, Team Project is looking to build in crypto. They're going to end up looking at realistic options like ETH and Near that can actually scale. Near, of course, has a better scalability solution, in my opinion, until the Ethereum merge. He expects Ethereum to have around 70% of the platform market share, Near with 25%, with both of them having 90 to 95% of the market. And I'm going to go through the statistics to substantiate why I like Ethereum now. But obviously, I would not recommend that portfolio. I wouldn't recommend Near and Moonbeam as your only holdings. In fact, I'm 50% Bitcoin and Ethereum right now. Still relatively risk off, but I also have some L1 plays in my portfolio, my high conviction plays. For example, Solana, AVAX, Near. I have a little bit less allocated, but still allocated to Phantom and Moonbeam because I think they're great plays. But I think more to the point, what this thread is highlighting is the fact that something like a Near is offering risk reward. So I did my own digging into the transactions and I did my own comparisons and some mathematics that I think are angling towards a narrative shift. And I want to go through those observations now and run you through what I'm observing in terms of Near protocol. Okay, the first thing I'm observing is a bit of a resilience here. So despite a huge drop in the market, the overall trend, if you take away some of these crazy spikes, is still pointing upwards in terms of daily transactions. We're seeing 670,000 daily transactions a day. So in order to get more of a perspective on what this looks like, we can see that the Ethereum daily transactions are around 1 million. So Near's only like 38% off in terms of daily transactions versus an Ethereum. And if we look at an AVAX's daily transactions, we can see that Near in the 600,000s is triple AVAX at the moment, albeit a lot of transactions were diverted from AVAX to the Krabata subnet. But nonetheless, we're seeing Near basically, it's basically up there with the other best chains. It's doing 600,000 to 700,000 a day. At its peak, it was doing 1.5 million. I mean, 1.5 million isn't a level Ethereum has hit since January, and it only did it for a day. So Near protocol is offering daily transaction volume higher than a lot of chains at the moment. It's doing more volume than Phantom. It's definitely doing more volume than Cardano, which is the thumbnail of the video. And it's setting itself up to be a chain that is actually utilized. Because when I look at investing in L1s, I want to look at chains which are actually being used and not just speculation. And it's one of the reasons why I haven't really invested heavily in Cardano because I want to see some tangible data. I'm not a huge fan of just betting on crazy rampant speculation. I want to see some real data to substantiate our thesis and underpin my thesis here. And I'm not seeing that from something like an ADA, but I am seeing it for something like a Near protocol. And I'm just going to be completely honest with you guys as to why that's the case. Now, the daily number of new accounts is where this gets very, very interesting. Near protocol is doing 190,000 to 200,000 new accounts per day. So if we look at another chain, for example, AVAX, and we look at the unique address chart, we can see that AVAX is putting in roughly 3 to 7,000 new addresses per day. If we do the exact same thing for Ethereum, and I'm just using these as comparisons here, Ethereum is putting in 80 to 100,000 daily new unique addresses per day. So if we look at Near protocol doing 200,000 per day, that's blowing the other chains out of the park. And one day it did 700,000 new accounts. So when we look at network effect and when we look at valuing blockchains long term, as I said, we want to look at how many users the chain can accrue. Now, the daily number of new accounts to me is suggesting that a real trend, a real narrative is now emerging for Near protocol. And it's one of the reasons why it's one of the only L1s I'm DCAing into at the moment. And it's because we are seeing the beginnings of this growth. This is a fairly new chain. We really only saw Near started to explode in December. So you're not late to this narrative. Look, you might be a few months late in the scheme of things, but the reality is if you were buying then anyway, you'd probably be down at this point. So, we're not at levels seen since September last year. And in September last year, Near protocol essentially had no new accounts. It had nothing happening on chain. So the fact now we are just starting to see the uptick in new addresses, that's a really, really positive sign to me. And when we look at the TVL for Near protocol, we also see a similar trend emerging that, yes, it's still quite a ways behind these other chains. And, it's only ranking in at number 13, and Aurora, which is a chain underneath Near, is ranking it at 14th. The reason for that is because it is still, in respect to these other chains, a very new piece of technology. And as the DeFi Edge pointed out, we need to see the development happening to create dApps. And once dApps are created, that's when we see users come into the chain. So this is a bet that is still quite early in its life cycle. So there's by no means a rush to ape into Near. But what it's showing us is the beginnings of the dawn of a new ecosystem right now. So Near is largely dominated by Aurora, but there are still some great protocols built on Near, which I want to show you right now and run through a little bit of a staking strategy here for Near holders. Because my strategy right now, and I'm going to go through my DCA strategy right now, it is to accumulate primarily Bitcoin and Ethereum, and that constitutes roughly 70% of my new DCAs. And then the other 30% of my DCAs are geared towards L1 bets with good risk reward. So right now, in that category, you can have a little bit of leeway to determine what you like. But personally, that 30% is mainly Solana, AVAX, and Near protocol, because I feel like those three out of one of them, or at least 2 out of 3 of them, is going to be a major player and have a major amount of dominance over the other L1s over the next few years, because they already have solidified ecosystems, great tech, and they have the big backers. Out of those 3, Near is the least valued in terms of FDV, which probably puts it as having slightly more upside, although of course it has slightly more risk because the TVL is less than some of these other chains. But I am actively DCAing into Near protocol now, but I'm not going crazy with my DCA. So as I said, 70% still Bitcoin, Ethereum, and then 30% is being geared to just nibbling at these L1s, just little nibble every month, little nibble, just to kind of develop my position over the next few months. And then if we do get a massive capitulation candle from Bitcoin, and if we do kind of hit that 18K region that a lot of people are calling for, and I think it's still a very likely scenario that happens, then that's when I start scaling up my purchases for some of these L1s. And obviously that relies on having a stablecoin balance on the side. So my primary focus at the moment, although I am DCAing into these protocols, it's to maintain enough stablecoin balance on the side, enough income coming in to set myself up for a potential scenario where there is more downside. And in that scenario, then you're going to see much better looks on some of these L1s. But right now is the time to have your watch list ready. Now is the time to solidify what you're actually looking at. And it's really the time to be digging into the fundamentals. So that's exactly why I'm here today. I'm giving you an L1 that I think will be one of the best performers in the next cycle, but I'm giving it to you early enough to come up with an accumulation plan. So I'm not just telling you ape into Near, buy Near now. No, I'm saying these are the fundamentals. This is what's happening on chain. This is why I think it's a good play potentially. And that now allows you potentially many months of accumulation, or at least it allows you time to get an accumulation plan in place. Because I don't see this as an instant 2x in this or a 3x in this market unless Bitcoin pulled off something miraculous. But I see this as a very, very solid protocol to have on your watch list and one to have in your portfolio to start accumulating. So a lot of people are talking about ADA in the comments. ADA's king. Don't talk about ADA because it isn't a rug pull. ADA gang. So I want to address ADA for a second. Look, I have nothing against ADA. I think ADA is a great protocol. I think that it has some great developers, and Charles is playing the long game here. Charles is not playing this short game, liquidity incentives, trying to pump his bags in the short term. No. I mean, he's working with PhD students, professors, some of the top smartest minds in the tech space to develop a piece of technology which can compete with the highest of the highs in crypto. However, when you're investing in a chain, as I said before, one of the major components that I look for is transaction volume. I look for user growth and I look for network effect. Now, although Cardano has a big community, I personally feel like given its valuation, and if we look at the Cardano valuation, it's very, very high. What is it? 19 billion. I feel like coming in at number 7 for Cardano, I want to show you the charts here. Coming in at number 7 for Cardano with a $19 billion valuation is quite steep considering the lack of development we've seen on chain. Now, this isn't to say it can't succeed. It just means for me personally, from a risk reward perspective, I would much rather allocate to a Near protocol, which is right down the list, and actually has more backing in the sense that it has the VCs, it has some real transaction growth underpinning the chain, and it's only 4 billion. So it's like a 4x from Cardano. And if we do a little bit of math here, we can see that it's a 4.75x away. Now, I don't hate ADA. In fact, one day I might own ADA and I might own a lot of it. And when I do, I will come on the show and I'll openly admit that. But as of this current moment, I see a better risk reward in other protocols. And that's just my investment strategy. You don't need to agree with me. So I talked through my DCAs. And I talked through how I was allocating mainly to Bitcoin, Ethereum, but then also nibbling on some of these alts whilst maintaining enough stablecoins to take advantage of a major leg down. But there's another major component of my DCA strategy, which I want to share with you guys right now, and that is my yield farming. Obviously, you guys know I'm a major fan of yield farming. And over the last few months, it has become a little more difficult as a lot of the incentives have dried up. A lot of the Ponzi-esque DeFi schemes have come to an end, and I think that's good because the real quality is now rising to the top in this market. But you can still use DeFi, and I still actively use DeFi to accumulate tokens, because if I have a Near protocol sitting in a Binance account or a ByBit account, why wouldn't I want to utilize that Near bag and that Near position to be able to earn yield on it? Because what you can do is you can actually accumulate and DCA into Near through accumulation and compounding, if that's what you choose to do, rather than just keeping it sitting dormant in a wallet. So it's a no-brainer to me, and I found a strategy which I think is a very good one for Near holders to keep the ball rolling on some passive income, because we know the market's tough. We know it's a difficult market to profit in at the moment. So why don't we take our holdings and actually utilize them to start earning some yield? And we're still getting some great opportunities in DeFi to go and do just that. So I'm going to be running you through a staking strategy right now, which I like for Near protocol, and showing you exactly how to do it. Now, the first step is obviously you have to own Near. So you've got a couple options if you want to buy Near. I'm assuming a lot of you already own it, but if you did want to start DCAing, and I see nothing wrong with a very slow DCA into this over the next year or so, you can do so on ByBit. ByBit actually has a spot trading feature here, and you can trade Near USDT. So you can go into ByBit, you can purchase Near however much you'd like to purchase, and then that's actually going to give you an initial balance to be able to start the staking strategy. So once again, link in the description for a ByBit account. If you use my link, you're eligible to potentially have your portfolio doubled on the show this week, and I'll be doing that live and giving away free money basically. But you'll also get some benefits from signing up to that link. So that's how you can purchase Near. And once you've got Near, then you want to create a Near wallet. So this is the next step. Wallet.near.org is a website where you can create a Near wallet, and it's basically the biggest wallet in the Near protocol ecosystem. Now, there are other wallets, but this is the one I'm most familiar with. So what you want to do is you want to create a wallet. Obviously, just like creating a MetaMask, you'll have your seed phrase, you'll have your password, and once you create a wallet, you get an address for it. And you can see my address is in the top right. So once you have an address, you can take your Near that you purchase on an exchange like ByBit, and you can transfer that Near from your exchange to your wallet. And once you've traded your Near from your exchange to your wallet, as you can see, I've got 2.3 Near for the example of this video, then you can get involved with staking. So obviously you're going to need it in its own wallet if you want to get involved with staking. So once you've got your Near, there's a strategy called liquid staking, which I like. And a liquid staking strategy means there will be a third-party protocol which takes your Near protocol tokens, stakes them in the validator nodes, gives you a receipt. The receipt is staked Near, and that staked Near is now liquid. So instead of having your Near locked up in a validator node and you can't touch it for a year, they're going to lock it for you, but then they're going to give you a liquid version of that asset, which you can still trade with, which is valued one-to-one with Near. So basically, if you want to redeem your original Near, you'll need staked Near to execute the redemption. So I like this strategy because it's giving us the benefit of locking without the hassle of locking. Now, Metapool is the best app to do this in Near protocol. So it's metapool.app. And if you click on Start Staking Near, you are brought to this portal here where you can put your Near in to the pool for a 10% APY. So take your Near from your Near wallet and enter the amount that you want to stake. I've got 2.3 Near, for example, and you would simply click the maximum amount or however much you wanted to stake, and you'd hit this stake button here. And it will show you the amount that you can actually accrue if you go into this Metapool portal. So you can see how much is staked, the liquidity, the percentage return, and roughly right now it is paying 9.77% APY. But I told you that you can actually earn even more yield off this through staking, through taking these staked Near and then staking them again. And the best way to do this is on Near's biggest DEX, which is Ref Finance. Now, Ref Finance is a DEX that has liquidity pools. It's an AMM where you can earn yield on your Near protocol. So if you go on into the farm section here and you scroll down to find the farm, the staked Near, wrapped Near farm, you can see that this is paying an additional 7.79%. So what you'll be getting is 10% on your staked Near, and then you'll be getting an additional 7.79% on half of your other staked Near. So roughly this strategy comes out to around 13% APY. And I think that's actually very good as an alternative to just keeping it sitting in a wallet, because you're actively earning 13% when otherwise you would have been earning nothing. And if you're going to hold Near anyway, why not earn some passive income here? So it's very simple to do. You want to take half of your Near and stake it in Metapool. And then the other half, the other 50%, you want to keep in Near, so you don't want to stake it, because you want to come up to the top corner and swap that for wrapped Near. So if you click on this little bubble here next to your wallet address, you can click on it and you can swap your Near for wrapped Near. Now, what this will do is it will give you Near that's able to be staked, because you can't stake the Near tokens themselves. You have to wrap them. So 50% is wrapped in this top corner, and then the other 50% you put into Metapool. So you've got 50% staked Near and 50% wrapped Near total. And once you've got 50% of each, you can scroll down to this pool, which is the staked wrapped Near pool, and you can click stake. Now, if you click stake, you can click get LP shares, and this will enable you to deposit liquidity. So as I just said, you've got staked Near now in your wallet, you've got wrapped Near now in your wallet. You want to add them to this add liquidity page, and then click add liquidity. And what this will do is create LP tokens, which you can then stake in the pool. So once you've added your liquidity, your staked Near, your wrapped Near, once again, you just click on this get LP shares button on the farm. Once you do that, you can come back into the farm. Obviously this farm here, click stake, and then enter the amount of tokens that you want to stake, assuming you want to stake all of them because you swapped them, but you can pick any amount you want, and you can stake them in this pool here, and this will give you rewards. And the rewards it will give you is 7.8% on top of the 9.77% that you're earning on your staked Near in Metapool. And you'll be earning ref rewards. So you'll be earning the token of ref finance as a reward for staking. So you earn ref and you can claim them as little or as much as you like. Let's say you claim them once a week. What I would recommend is one of two things. It really depends on your situation. So if you're lacking stablecoins, you can honestly just take your ref rewards straight back into stables, which you can then use to DCA at better levels. Or if you're set on just accumulating Near tokens and that's your primary objective through this pool, then you can take the rewards, the ref rewards, come back into ref finance under swap, and then you can swap your ref back for wrapped Near. Now, what this will do is it means that you can compound back into the original pool. So you'll need to swap half for wrapped Near, and then you'll need to obviously, or you can swap all for wrapped Near, then you can swap half back under this swap sign here, wrapped Near for Near. So then you've got 50-50 again. And then obviously the Near that you have, which is 50% of your rewards, then you come back into Metapool and you stake them, and then you come back into ref finance and go down to the farm and recompound back into the farm. So it's a complicated way of saying that you can swap your ref rewards back for Near and then use that to compound back into the pool. So it's really up to you what you do. I do a little bit of both. I think when I'm lacking stablecoins, I sometimes make active decisions to take all rewards into stables, especially if the market starts pumping. When the market starts pumping, and you can argue today's a day like that, then maybe you're better off going into stables and buying your Near back, at lower levels. Or when the market's super duper low and it's crashing, then I think it's advantageous to actually compound back into the base pool. So this strategy is giving you guys an alternative to do that. And yeah, overall, I think that this is a good strategy for maintaining liquidity of your Near, but also earning some rewards on it. Beware of smart contract risk. Ref Finance does have big backers, and based on my research, it's relatively secure. However, there are always risks, and they even have a risks page, which you should probably look at, which shows you which audits it has and the admin keys and the rug pull risk and all that. So do read through this before you invest, of course. But I do like Ref as a place to be able to stake my Near. So just to summarize, the Near protocol fundamentals are very strong. We're seeing great transaction volume. We're seeing a thriving ecosystem being built out on Near and Aurora. However, we're still very early, and this is a very early time in Near's total protocol development. And I do think it's going to take some time to flesh out in terms of getting those developers in terms of getting those users. And this isn't a short-term play by any means, but what it does have is sharding, and it has a very quick solution to scalability very soon. And it's probably got some of the strongest tech amongst all the L1s. So if I'm betting on VCs, if I'm betting on tech, then I'm betting on Near. And that is why it's a protocol that I'm DCAing into as part of my DCA strategy. So if you enjoyed this video, make sure to smash the like button and subscribe, of course, if you're not already subscribed. Remember, we're going to be doubling portfolio. So if you want to sign up to ByBit, there's a link in the description. And of course, that means you can take part in Sheldon's live trading show. I mean, who doesn't want to take part in that? But also, if you guys do want to ask any questions, because I know there's quite a few questions coming in, then you can you can come onto my Instagram, which is the link in the description, and I'll be going live right now to answer any questions you have. So if you want to hang out with me, have a chat, talk about crypto, talk about projects and investing, you can come and ask me a question on Instagram. I'll be going live in around 30 seconds on my Instagram. So I hope you guys enjoyed the show. Hope you have a lovely day, and I will see you in the next one. Peace out.